Welcome to the deep dive. Today we're zeroing in on Newgen Software Technologies. You've probably heard the name. And we've gathered quite a bit of material to really unpack what they're all about, their operations, financial health, that kind of thing.
That's right. We've got a mix of sources, financial reports from, I think, 2018 right through to 2023.
Yeah.
Plus earnings call transcripts from various points, Jan 22, April 24, May 23, and also a shareholder meeting notice and a rating rationale document. So quite a diverse set to get different angles.
Exactly. And our mission here really is to cut through all that detail and pull out the most important bits for you, the listener. What's driving their growth? How are the financials looking? What about how the company actually runs internally? We want to give you a clear picture without drowning you in data.
Makes sense.
Okay, so let's start with their growth and strategy. It looks like they've got some real momentum recently.
We certainly do. That recent Q1 for fiscal 25 showed 25% year-on-year revenue growth. That's pretty strong.
25%. Wow. And is that consistent with previous years or an uptick?
Well, looking back at the financials from 18 to 23, that 25% feels like an acceleration. It suggests, things might be picking up pace.
Interesting. And where's that growth coming from? Is it spread out?
It's quite revealing, actually.
Yeah.
In that same Q1, EMEA, that's Europe, Middle East, Africa was up 42%.
Report to you. Okay.
APAC, even higher, 65%. India saw solid growth, around 20%. And the U.S. was up 13%.
So really strong in EMEA and APAC particularly.
Exactly. And what's interesting, if you look back at some early reports, India and the U.S. growth was, well, a bit slower in previous periods. So this might signal a shift. Maybe their strategies in those bigger regions are really starting to pay off now.
Right, that makes sense. And speaking of strategy, one thing that seems to come up a lot is their move towards SaaS, away from the old perpetual licenses.
Absolutely. That's a huge theme. They're definitely pushing towards subscriptions, cloud services. It's a big trend across the software world, really.
Yeah, for that recurring revenue.
Precisely. More predictable income streams. And you can see it in the numbers, too. Back in FY22, their subscription revenue grew 23%. So this shift isn't brand new, but it's clearly gaining steam.
Okay. And are they focusing on particular types of software solutions?
Yes, very much so. The documents consistently mention trade finance, digital lending, and supply chain finance as key growth drivers.
Right, those specific areas.
Yeah, it looks like they're seeing strong market demand there. The Q1 FY25 call highlighted adoption in these areas, and I remember the May 23 call mentioned good traction with their trade finance product, especially in places like the Middle East and India.
So a targeted approach. Now, something else caught my eye, this Lumen platform. Gen AI-powered hyper-personalization for banking. That sounds pretty cutting edge.
It does. It's a sign they're not just sticking to the knitting, They're looking at leveraging newer tech like generative AI.
So trying to innovate.
Exactly. If Lumen takes off, focusing on using AI for personalized banking experiences, that could be a really significant growth engine for them down the line. Shows they're thinking ahead.
Okay. Another strategic piece seems to be their relationships with global system integrators, GSIs.
Yes, the GSIs. Big consulting and tech firms. The idea is to leverage their reach to sell and implement Newgen solutions more widely.
But it sounds like that's more of a long game.
Very much so. The reports suggest that right now, the revenue from GSIs is still relatively small, but the ambition is huge.
How huge?
They're talking about it potentially being 40 or even 50% of their business within maybe 4 or 5 years.
Wow, okay. That's a massive shift if they can pull it off.
It's a big strategic bet, definitely. Could really change the shape of their business.
And does that tie into where they're expanding geographically? Are they pushing into new markets?
It seems so. There's talk about targeting mature markets more, like the U.S., while also expanding in places like Australia.
So not just relying on existing strongholds.
No, exactly. They seem to have different strategies for different types of markets. The FY21 annual report even laid out a specific regional approach, kind of tailoring it to mature versus developing economies. The push into Australia, mentioned in that May 23 call, is a good example of that in action.
And they're broadening their offerings too, right? Beyond just lending and account opening.
Yes, definitely. Moving deeper into that trade finance space we mentioned, supply chain, service request management, and also making a bigger push into the insurance vertical.
Diversifying.
Right. Spreads the risk, opens up more customer potential, less reliance on just 1 or 2 areas. The Q1 FY25 call specifically mentioned strengthening their insurance offerings.
Okay, so a lot going on with strategy and growth. Let's switch gears to the financials. The overall picture seems to be positive revenue growth.
Yes, that's a very consistent theme across the reports and the calls. Year after year, the top line seems to be heading in the right direction. Shows sustained demand.
And profits. Are they growing profitably?
It's like it. Healthy profit growth and expanding margins are mentioned. In the latest Q1 call, they actually talked about targeting a petty margin profit after tax of around 20%
Okay.
and an EBITDA margin around 23–24%. Interestingly, they also said they'd reinvest anything above those levels back into growth.
So balancing profitability with investment and have those targets change over time.
A little, yeah. Some earlier documents, I think from FY23, mentioned slightly lower targets, maybe
Yeah.
17–18% net margin, 22–23% EBITDA. So the fact they're aiming a bit higher now suggests, growing confidence and maybe better efficiency.
Got it. What about the order book? Is that growing too? That usually gives a clue about future revenue.
Good point.
Neat.
Yes, the document suggests their order book growth often outpaces the actual revenue growth.
Which is generally a good sign.
It is. Indicates a healthy pipeline. They seem to view booking growth typically over a 365-day window, so it gives a decent near-term outlook.
Okay. And receivables. I saw a figure for days sales outstanding, DSO.
Right. As of June 30th, 2024, net trade receivables were about 402 crores, and the DSO was 112 days.
112 days. So that's how long it takes them to get paid on average.
Exactly. It's a key cash flow metric.
Yeah.
But it's worth remembering, as one report noted, that debtor days can be seasonal, often higher around year-end, like March. So you need to look at the trend, not just one snapshot.
Good point about seasonality. And they're investing back into the business too, right? R&D spending.
Yes, around 9% of revenue going into R&D.
Which seems pretty standard, maybe even necessary in tech.
Absolutely crucial.
Yeah.
That's how you stay relevant, innovate like with Lumen, and fight off that technology obsolescence risk. It's a commitment to the future.
And finally, on financials, any major sensitivities? Forex.
Yeah, like any company with global operations, they are exposed to foreign exchange fluctuations. Changes in currency rates can impact their reported equity and profit.
So something to be aware of.
Definitely. One report actually did a sensitivity analysis showing even a small 2% shift in the value of some investments could noticeably affect their equity. It's just part of the territory for international businesses.
Okay. Let's move inside the company now. Internal operations, governance. What stands out? Some mentions of employee well-being programs?
Yeah, they seem to put an emphasis on that physical and mental wellness initiatives. Things like employee committees, medical benefits, even childcare support were mentioned in one of the reports.
Which can help with morale and retention, presumably.
You'd think so. A positive work environment usually leads to better engagement and productivity. It suggests they value their workforce.
And governance. How about the board?
They do an annual performance evaluation of the board itself, its committees, and the individual directors.
That sounds like good practice.
It is. Standard good corporate governance, really. Helps ensure accountability and effective leadership. Shows maturity.
What about related party transactions? Dealings with insiders?
They have a clear policy for that, which is good. And the reports state they haven't given guarantees or loans related to these kinds of transactions. Transparency there is key for investor trust.
Makes sense. And CSR, corporate social responsibility.
They seem active there, focusing on children's education and quality of life. And recently, they launched a skill development center for women in underserved areas.
So giving back to the community.
Yeah, showing commitment beyond just the bottom line. That new center is a tangible example.
They also have a whistleblower policy.
Yes, established and apparently revised over time. Provides a channel for employees to report unethical behavior confidentially. Another cornerstone of good governance.
Important for maintaining integrity. And stock options, ESOPs.
They use ESOPs, yes.
True.
And also RSUs, restricted stock units, through their 2021 scheme. It looks like they have a broad-based allocation too, not just for top execs.
So spreading the ownership incentive?
Exactly. Helps align employee interests with shareholder interests, encourages long-term commitment.
And lastly, internal financial controls. Seems management takes responsibility and auditors sign off.
Correct. Management affirms their responsibility, and the auditors have given opinions on the adequacy and effectiveness of those controls. That's fundamental for reliable financial reporting. Stakeholders need to trust the numbers.
Right. Absolutely critical. Okay, so we've covered growth, financials, internal stuff. But what about risks? Every business faces them. What did the documents highlight for Newgen?
Well, a big one, unsurprisingly for a tech company, is technology risk. things changing fast, software becoming obsolete.
The R&D spend helps mitigate that, presumably.
That's the idea. Continuous investment is their main defense against falling behind the curve. Another one mentioned is credit risk.
Risk of customers not paying.
Exactly. They have policies for managing that, assessing customer creditworthiness, setting aside provisions for potential losses, standard financial risk management.
Okay. So we've covered a lot of ground. If we were to boil it down for the listener, what are the key takeaways from this deep dive into Newgen?
I'd say Newgen looks like a company showing strong, maybe even accelerating growth, especially strong signals from EMEA and APAC recently. They're clearly driven by focusing on specific solutions, trade finance, lending, etc.
And that strategic shift to subscriptions is key.
Absolutely. That plus the big bet on GSI partnerships for future reach. Financially, they seem healthy, profitable, but also reinvesting smartly in R&D and growth. And internally, there's a clear focus on governance, employee well-being, CSR. It paints a picture of a growing, strategically focused, and reasonably well-governed tech company.
Okay. So here's a final thought to leave our listeners with. Considering Newgen's big push into mature markets like the US and how much they seem to be counting on those GSI partnerships for future growth, what are the potential hurdles or maybe even unexpected opportunities they might face in hitting those pretty ambitious targets over the next, say, few years? It's worth thinking about the long-term game here, given the competitive landscape.
That's a great question to ponder. Execution on those GSI partnerships and cracking those mature markets will be critical. And of course, if listeners want to dig even deeper, the investor relations section on Newgen's website has all the source documents we've been talking about.
Excellent. Well, thanks for joining us for this look at Newgen Software Technologies. We hope this deep dive has given you a clearer, more concise understanding of where they stand and where they might be headed. Until next time, take care.